Welcome back to Alpha Recap, your quick, clear look at the trading day. Markets closed the session with a real split between big tech and smaller names, and we're digging into what drove that. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature to ask us directly.
Great to be here. The tape was one of those days where headlines and sector-specific flows really shaped who won and who lagged.
Let's start with the headline indexes. I know listeners want the quick read. What happened?
Sure. The broad market was essentially flat by the close. The S&P 500 barely moved. The tech-heavy index we watch finished the day up just over 0.5%, while the small-cap benchmark finished down about 0.2%. That created a clear winner-takes-most feel.
So, what really stands out here is big tech and media were the engines, and small caps just couldn't keep up.
Exactly. Investors appeared to favor companies with clearer cash flow paths and secular growth stories. Think platform businesses and AI beneficiaries, while domestically sensitive, cyclical names lagged.
Okay, walk me through the mechanics. What were the cross-cutting stories that moved the tape?
There were a few. First, communications and media got a tailwind from reports of stronger ad demand, especially related to YouTube and ad tech. Second, AI momentum resurfaced in several enterprise and infrastructure names. Third, there was a geopolitical shock around the Hormuz region that tightened physical energy markets. That pushed oil-related names higher and introduced renewed inflation sensitivity. Finally, a cannabis rescheduling headline created a short-lived policy-driven swing for that sector.
Right. And the other thing is, advertising coming back felt like a big driver for the winners, yeah?
Advertising strength explained a meaningful portion of the tech and media outperformance. When ad demand picks up, platform revenues scale quickly, and that lifts the whole group.
Let's hit sectors quickly. Communications and media, a clean winner today, right?
Yes, renewed advertiser confidence, especially tied to video and streaming platforms, boosted those stocks. It wasn't a broad consumer spending story, so much as advertisers spending back into measured channels.
And technology? AI-linked names got a lift?
They did. Companies tied to enterprise AI deployments and infrastructure saw momentum. Even a clean energy name that highlighted an expanding AI pipeline rallied, illustrating how AI demand is bleeding into adjacent sectors.
Energy tightened after that Hormuz shock, which had ripple effects, right?
Exactly. Physical markets tightened, which supported crude prices and sent strength into exploration and production in oil services. That helped offset some defensive flows, but it also raised fresh inflation watch anxiety.
Small caps were the underperformer. That always feels significant.
It was significant. The small cap weakness suggested selective accumulation rather than a broad-based risk-on move. When large caps outperform while small caps lag, breadth narrows and markets can feel precarious.
Short reactions.
Yeah, that tracks.
Okay, let's dig into some notable individual stock stories from the day. Who stood out?
A few names jumped out. A distributed power and storage company rallied after management said its pipeline tied to AI workloads was deepening. A big alternative asset manager fell after a disappointing report and fundraising questions. An online used car platform posted a record first quarter and popped on the print, though that business is still sensitive to credit and used vehicle price trends.
And the consumer staples corner?
The consumer giant we track reported about 10% organic growth and raised its earnings per share outlook. That underscored the resilience of price and volume mix for staples, and it supported that stock.
We also saw some mixed readings in real estate and financials, right?
Yes, some real estate investment trusts gained on deal announcements, but the overall group was mixed because financing and policy considerations remain headwinds. Financials were complicated. Deal chatter and fundraising dynamics weighed on some names, and even lenders that posted operational records still traded cautiously because credit sensitivity and yield expectations remain front of mind.
And there was that cannabis flash reaction, a roller coaster.
Right. Rescheduling headlines sent some names higher on the prospect of regulatory relief, while others gave back gains as profit-taking set in. It was a reminder that policy headlines can disproportionately move sectors that trade on binary outcomes.
I mean, when you step back and look at this, the market was telling us to pick and choose, not to broad shop.
That's a good way of putting it. Technically, the advance was concentrated. The tech-heavy index outperformed, the broad S&P was flat, and small caps lagged. Breadth measures were subdued. Historically, that pattern has preceded periods of concentrated leadership, and those periods can reverse quickly if sentiment shifts.
Let's talk macro. The calendar was light, but the market really reacted to inflation optics and Fed sensitivity. Explain that.
With energy prices moving higher after the geopolitical shock, the market got more sensitive to incoming consumer price index and personal consumption expenditures data. If energy-driven inflation persisted, it could complicate the Fed's path. Traders were assigning a modest chance of a more hawkish tilt if data surprised to the upside, but that was balanced against slowing wage and services momentum.
So what should listeners watch next?
4 things: upcoming inflation and jobs prints and any Fed commentary. The trajectory of energy prices and supply updates around the Hormuz situation. Earnings and corporate guidance, especially from large cap tech and financials. And whether communications and media strength broadens or fizzles. Also keep an eye on small cap breadth. Continued underperformance there would suggest a persistent risk-off stance among domestic cyclicals.
Quick reactions, 2 words each.
Watch energy.
Watch breadth.
And volatility.
Final read. Sum it up for listeners in plain language.
Today's session showed a market still searching for a clear macro story. Leadership was concentrated in tech and media. Investors rewarded predictable growth and AI or advertising exposure. Small cap weakness signaled caution on the cyclical recovery, and energy's tightening after the Hormuz shock introduced an inflation risk that could sway Fed thinking. For now, the tape favors selective, quality-oriented exposure rather than broad risk-taking.
Honestly, I was a bit surprised by the energy pinch. You could feel it in names across the board.
Yeah, it was a reminder that geopolitical shocks can quickly influence market positioning, even on a day with light macro data.
Quick takeaways for listeners. 3 bullets in plain English.
1. The day closed with concentrated leadership. Big tech and media outperformed while small caps lagged. 2. Energy tightened after the Hormuz shock, raising near-term inflation sensitivity and Fed watchfulness. 3. Market internals suggested selective buying, not a broad breakout, so breadth and volatility are key signals to watch.
Great. Reminder, this is informational only. We're not giving personalized advice, just market color and context.
Correct. Analyst commentary reflects market data and research, not personalized guidance.
Thanks so much for walking through the tape with me today. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. And don't forget to use the Q&A feature to send us your questions.
Thanks. Talk to you next time.